investing platforms out there that allow you to start investing with just £1, and I've been an advocate of that for a while. I personally think it is a great way of dealing with some of the fears and limiting beliefs that we have about investing. It is also a great way to gain some experience, education, and strategize. So how would I start investing with £1? Welcome to Looking After Your Pennies, a platform for financial education where I try to put out information about all financial topics so that you can make educated decisions about your personal finances. I'm not telling you what to do or giving you financial advice, and there is more about that in the description. You also need to know that your money can go down as well as up when investing. This might not matter when you start with just £1, but you need to think about how you might feel if it was £100 or £1,000. So the first step is to find your platform. Right now, Freetrade are offering new accounts a free share worth up to £200 when you deposit £1 or more. So if you don't already have an account there, that seems like a great way to get an initial boost to your investment. You can sell the share you get and invest it where you want. There's a link to this offer in the description. Other platforms that allow you to start investing with just £1 would include Wealthify. You can start with £1 or £50 if you want their pension. Wealthsimple has no minimum investment. And Plum is a clever money management app that allows you to invest with just £1. Once you know the platform that you're going to use, then it's time to decide what to do with your money. This is the bit that can take time, and you'll perhaps learn the most if you are new to investing. You could research an individual stock. You can look at trading patterns, recent developments in the company, upcoming projects, news reports, social media, and so much more to get an idea of that stock's potential. The more knowledge, the better. But even the most experienced investors cannot predict what is going to happen in the market. So is there another way? Well, funds could be the answer to that. A fund is a group of stocks bundled together in a sort of package deal. Your investment would be split across a range of different stocks. The advantage here is you are then investing on an average of the companies. So the performance of an individual company doesn't hugely affect your investment on its own. This tends to lead to less dramatic ups and downs, which is good for someone looking to be a little safer with their money. Some people don't invest in this way because they're hoping to pick the stock that suddenly shoots up in price and make a quick profit. But this is hard to judge, and even experienced investors choose not to waste their time trying to pick the one. So now you have your platform decided, and you've put your money into a stock, stocks, or a fund. Now what? What I would do now is sit back and maybe schedule a few times to look at my investments. This could be monthly, quarterly, annually. This will vary dramatically based on your investing goals. I would suggest not doing anything with it for a while. This could avoid some fees and will also allow you not to panic over little dips that you may experience. That's it. It is nothing complicated. So if you've been thinking about investing, then maybe this is a way that you can start. Remember, there is a link in the description to get your free share from Freetrade. Good luck, and I will see you in the next video. Bye.